The Oklahoma City economy remains red hot, benefiting from the regional energy boom, but economic strength here hasn't consistently translated to apartment market strength. Is that starting to change? Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons, your Oklahoma City update. When you look at metros that have had the strongest employment gains of the last 5 to 6 years, there's a common thread: energy. And while most people tend to affiliate the energy boom mostly with Texas, we've also seen substantial benefit from the energy boom in the state just north of Texas, Oklahoma. And take a look at this chart showing year-over-year employment change in the Oklahoma City metro area. Not many metros have trends like this, with nearly 4 straight years of consistently solid gains, average annual growth rates right around 2.5% or so. On net, Oklahoma City's job base has grown 8.1% since the start of 2008. That is a top 10 performance nationally, and it means on net there are about 50,000 more jobs here than there were prior to the recession. Now, despite those consistently strong employment gains, we haven't seen consistently strong apartment revenue gains. This chart shows year-over-year revenue change in Oklahoma City over the past 4 years, and you can see that OKC was a quick recovery market, posting huge gains of 4, 5, 6, 7% in 2010, 2011, and 2012, but it's slowed off since then. Revenue growth has been in the 2% range for most of the past year. And why is that? We'll come back to that in a minute, but first let's look at what's going on with occupancy and rents. We did see some solid quarter-over-quarter gains, specifically in Q2 14, which is a seasonally strong quarter. Occupancy jumped 90 basis points in Q2 up to 93.5%. Still below rates we saw earlier in this cycle and still down 40 basis points year over year. It's important to note, though, there's a strong or a significant dichotomy between top-tier and bottom-tier apartments. Units built since 1990, you can see, all have rates above 95%, but older units are weaker, particularly those built prior to 1980. A lot of stuff here is built in the 70s and 80s, and that glut tends to pull down the market, especially those units built in the oldest ones built in the 70s and even earlier. Now, switching gears to rent growth, OKC saw very strong gains from 2010 through the first half of 2013. Obviously, that correlates to the revenue growth numbers you saw earlier. More recently, we've seen year-over-year rent growth slow down, going below 3%. And as of Q2, the number came in at just 2.1%, which was the metro's lowest growth rate in 4 years. Now, remember that big split we saw in occupancy rates by age, older units being weaker than newer units? When we look at the current rent growth stats, it's the exact opposite. You see year-over-year rent growth of less than 1% in units built since 2000, mediocre growth of around 2% in units from the 90s and 80s, and strong hikes in the older units. And that is a change in the past. Newer units have generally done well here, while we've seen a lot of volatility in the older stock. So what's going on? Well, one big issue in Oklahoma City, like a lot of spots, is that we've seen a lot of pent-up demand unleashed for single-family homes. Home sale volumes continue to climb. Home prices here remain very affordable, to the point where monthly mortgages are comparable to average apartment rents on a monthly basis, assuming you could afford the down payments. So what does that tell us about the future of the Oklahoma City apartment market? Well, we still think the outlook is pretty bright. The structural themes are strong here. The economic growth should continue. We've seen good demographic growth as well in terms of the key segment for the apartment market, which are educated young adults. And we think the overall demand tailwinds will be strong enough to push both the apartment market and the single-family market going forward. And particularly in the upper tier of the market, we think that rent growth should come back in that segment. And so in the more desirable submarkets and in the newer apartments, we do think performance should be pretty good, particularly because new supply has been limited for the past decade or so, and we really aren't seeing a big pickup in the near future in terms of the current pipeline. So all that suggests that Oklahoma City should regain its spot as one of the top performing secondary markets in the country. And that wraps up for Oklahoma City. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thanks for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.